Okay, guys, we'll start the webinar. So first of all, thank you very much for joining this webinar. My name is Zhuling. So I'm the founder and CEO of RockX, which we specialize in offering secure staking yield to our customers and also provide data access for anyone who would like to access blockchain and interact with them. Yeah, so this is the first time that we're going to do we're doing a webinar. So thank you very much for your interest of joining us today. The reason why we started this series of webinar is because, first of all, we are proud of and super interested in what we're doing. That's why we would like to share, how we look at why we're doing this and how we look at this industry. And secondly, as most of people looking into blockchain, either from a technical perspective or from a financial perspective, there are some interesting things we would like to share, right? Because from a technical point of view, POS staking is the fundamental layer to make all the blockchains work. And number two, from a financial perspective, everyone's looking for yield, whether it's about trading profit or lending interest. But staking is what we offer as the first crypto native yield that comes with very interesting features. That's why, we kind of would like to explain this as the crypto native corporate bond market, or sometimes people call it the internet bond. Yeah. So before we get into the presentation itself, please do follow us on Twitter, Discord, and LinkedIn for the latest news. Yeah, so we will try to do a lot of 101 educational materials, and also we are engaged very heavily in the crypto native community. So you can see the both words, how they're going to merge in the end. Okay. All right. Yeah, so let's go. Let's get it started. Yep. So first of all, thank you very much again for being with us for this webinar. So RockX is basically a financial cloud provider that we offer crypto yield to token holders, and we also offer on-chain data access to anyone, whether it's a wallet or it's an application, if they want to know what has happened on a blockchain, or if they want to send transactions and receive transactions on the blockchain. So we have the access node service for them. And lastly, we are working on R&D to make sure that private key management is easy for our customers. So this should be the experience should be as simple as how we're managing our bank account nowadays. Yeah. So, but blockchain is a very different creature. That's why we need to apply a lot of cryptography and also distributed methods in order to make that work. Yeah. So our current client base are mostly institutions. Yeah. So whether it's a crypto fund, or it's a wallet, custodian, or a asset management firm. But of course, our service is permissionless, so anyone could use our service as an individual very easily. So some of you may have already known that yesterday we announced a funding round for our Series A. So we raised $6 million, led by Amber Group, which is one of the largest crypto asset management firm in the world, and they're also backed by the sovereign fund of Singapore, Temasek. Together with Amber, we also have Matrix Port, which is one of the largest custodian bank, crypto custodian bank in the space, and also we have a lineup of prominent VCs such as Primitive, Dripper Dragon, IMO, etc. So this is a great acknowledgement, a recognition of what we have achieved in the past few years. We started in 2019, and right now we have expanded our services year by year So we're really excited, to partner with all those strategic investors and work even more to serve our clients better. Okay, so if we look at the primary service we offer, which is proof of stake staking, so we have been doing this since 2019. First started just with a few blockchains because back then proof of stake was not really a prominent technology yet. But if you look at for the past few years, 2020 and 2021, a lot of DeFi's come up. A lot of new blockchains comes up. But most of them are operating on top of a proof of stake blockchain. Yeah, so this has also spurred our growth. So we have around $1 billion of staked value for our customers, and that generates around 5 to 10% of yield to our customers. So it's a decent revenue to our customers. Yeah, and our offerings covers most of the prominent proof of stake blockchains, including Ethereum 2.0, Polkadot, Solana, IOTX. IOTX is a blockchain designed for MachineFi, and Rose, Luna, Kusama, and some of the layer 2, such as Katesi, etc. Yeah, so we're really trying to make sure that, okay, anyone who holds proof of stake tokens, they can easily find us and stake with us to generate yield. So we're a team mostly based in Singapore. We have a couple of guys across Asia, such as like South Korea, Australia, etc. Yeah, so on this slide, I'm the CEO. So I started crypto ventures since 2017. Together with me, we have Guang Lei, who has joined us from Goldman Sachs, to look at how to build blockchain products. And also we have Calvin, who has more than 15 years of IT experience, and he has been managing all the staking validators to make sure that they all work 24/7 smoothly. Oh, and yeah, I just see that, okay, there is a poll that I'm supposed to mention. Sorry, guys. So yeah, let's start a poll first because we want to understand our audience and so that we can tailor this webinar better in the future. So let's start the first poll. So the first poll here is, have you ever staked before? Yeah, you can see on the you can just click yes or no. Okay, I see the two bars like competing and balancing out. Okay, people are typing. Okay, we have a very balanced crowd. Some of them staked, some of them have not. Okay. Okay, so thank you very much for taking the poll. We will continue. Yeah, also in the team, we have Xinjing, who is in charge of sales. So he has a experience combined with financial services and also cloud solutions. Yeah, so after this call, you can easily find us on our Discord. Yeah, because we're also doing a campaign on our Discord to reward people who join us, and that's the best place to hang with us and ask questions. Okay, so why do we need to look at crypto staking, right? Okay, it's just okay that people put money in banks or they buy like traditional financial products, but unfortunately, it may work 20 years ago, but not really now. Yeah, I think most people are aware that interest rate has been an all-time low. We're looking at 0 to negative interest. And to make it even worse, inflation is something that concerns us all the time because that means, our hard-earned money are becoming less and less valuable. Yeah. And on the other hand, values and also business activities are getting more and more virtual onto internet. So internet is also embracing blockchain, so to become the Web 3.0. That's why it's really important for us to find sustainable and attractive yield. So why we focus on sustainable and attractive is because we believe this is an industry that has a lot of potentials. We need to look at what are the long-term sustainable ideas, right, that will stay for long, instead of just be there for 1 month or so. And also we need to find a decent yield, right? So that gives us a reasonable reward, and without having too much risk exposure. Yeah, so proof of stake staking is what we think is making is the right sustainable and attractive yield that is gonna benefit every single person. Yeah. So to make it very simple, what exactly is a stake? How is staking rewards us, right? So if you ever have a wallet, or you have your tokens in a custodian or so, with staking, basically right now your wallet does not generate any additional benefit for you, right? If you have 100 Ethereum, it's gonna be 100 Ethereum forever. However, if you start to participate in staking, so two things will happen. Number one, the tokens never gets out of your wallet, so it's always there with you. And number two, there will be an interest, or we call it yield, that goes to your wallet every day. So this turns your wallet from a current account to a savings account. That's why we think staking is the interesting comparison with a traditional banking account. Yeah, so let's look at a comparison here. So first of all, if you look at the yield from staking, we're talking about 5% to 40%, depending on what type of POS token you're staking. Whereas for a banking account right now, sometimes we find the interest is minimum. Yep. And in terms of tenure, so staking does not so you can unstake your tokens anytime. So it's very similar to a flexible term account. Whereas in a bank account, you could either have a flexible or fixed term account. Yeah, so for any bank account, the one thing that we need to look at are the risks, right? So whether there's any background risks. So for example, for proof of stake, no, because the tokens are not put with someone else. The tokens are always locked in the wallet that is controlled by yourself. Whereas, so if you want to withdraw, you can withdraw anytime. Whereas a bank account, in extreme situations, there are actually risks for bank run. Yep. So this is less of an issue for more developed markets. However, if you look at developing markets and emerging markets, bank run still happens once in a while. And lastly, okay, yield are attractive, but the most important thing here is about our principles. Yeah. So in a traditional bank account, the principles are usually covered by insurance, which is great to a certain amount. However, as a customer, we're still aware that because your principles are lent out in order to gain the interest, that's why you're exposed to non-performing loans, meaning that if people fail to pay the interest and also the principal back, and also because you are relying on a bank, so you need to look at the bank overall, whether they're facing any liquidity issue or solvency issue. Yeah, so these are the kind of things that tied up with the third party, which is a financial institution. Staking, on the other hand, again, because all the tokens are with yourself, and those are not lent out, so it's always securely stored and no one can ever touch it. We cannot touch it. Not anyone else can touch it. In this case, there's no third party in the middle for in order to make you earn the yield. Okay. So hopefully, with that explanation, that already got your interest in that. Okay, this is a nice way of gaining yield, especially for your crypto assets. But let's look at how big this is, right? If this is just like something small, yeah, I mean, we don't know whether this is gonna stay or not. But if we look at the current state, so stakingrewards.com has made this a very nice summary that right now globally, there are $224 billion of tokens staked. Yeah, and we're looking at a monthly a growth of at least 10%. And that is almost 4.6 million users using it. Yeah, and the rewards that comes out from this is around $25 billion to the stakers. So this means, to put things in perspective, right? So we're looking at probably a decent size of deposits, around $200 billion. And there's a 10% yield that goes to those stakers. And we're looking at a decent size of bank that, in this case, the stakers, that is around close to 5 million people globally. And if you look at the growth rate, this is really encouraging, right? So this is definitely something that's worth people's attention. And this is getting more and more attractive because if you look at the market cap of the top 15 cryptos, half of them are already proof of stake blockchains. So this means, most of the proof of stake blockchains and assets are the most valuable ones in the market. And, BTC, of course, is a great storage of value, and it's going to stay as proof of work for long. However, the second largest crypto, which is Ethereum, so it is shifting to proof of stake. The staking has happened last year, and this year Ethereum is going to merge POW and POS. So this means the proof of stake yield will go up. So based on our estimation, at least it's going to double this year. Yeah, and this is why at RockX we have also spent a lot of time looking at how staking for Ethereum would work and how to help our customers to harness that. Okay, so I see people are asking questions. That's perfect. Gandalf has asked a number of questions. I will keep those questions to be answered at a later stage because some of them will be covered by this presentation. Okay. Yeah. Thank you, Gandalf. Okay, so we have used proof of stake for so long, for many times in this webinar. Some of you probably also have heard this term staking many times, right? So what exactly is proof of stake? So in this case, we're gonna play a very short clip to walk you through what this is. This is a clip that we also internally shared for our employees, our team members, to look at for educational purpose. Yeah. So let's watch that.
Proof of stake. Proof of stake is similar to proof of work. Both are used to attain consensus and keep the underlying blockchain secure. But there is one important difference. Proof of stake requires far less work to validate data blocks and thus requires less energy. In proof of stake, there is no race against the nodes to validate a transaction. Instead, they now take part in a lucky draw, whose winner is decided by the blockchain itself. The winner then validates the transaction and gets a much smaller reward for having consumed much lesser electricity. But then how do we know that the winning node won't cheat and validate a wrong transaction? Well, to volunteer in this lucky draw, you have to stake some of your own cryptocurrency into a storage. If you cheat, you are penalized, and some of your staked coins are taken away by the entity that spots the fraud. In fact, to keep the lucky draw fair, the more crypto you stake, the higher are your chances of getting picked as the winner. However, it's still random.
So just to summarize, what exactly is proof of stake? Let's take an example. So a blockchain is basically a payment system like Visa network, essentially. Of course, I'm simplifying a lot of things, but blockchain, the primary task is to make sure transactions are processed securely and accurately. Yeah. So unlike Visa, which one company just ensures all the transactions are right, proof of stake is basically a way that allows multiple parties to process those transactions and cross-check, so that if one party makes it wrong, the other parties can alert them, and also making sure all the transactions are right. Yeah. So in this case, proof of stake is really for us to participate in the validation work on the blockchain. So this means that essentially participating in proof of stake is that we are operating the blockchain partially. So we also understand, when we're talking to people are saying that, hey, Zhuling, like, how come in your business for RockX, you guys are only supporting limited amount of tokens? Why you're not supporting stablecoin staking or other type of DeFi token staking? The reason is because staking as a term has been used very loosely. Yeah. So stablecoin staking or DeFi token staking is not really a proof of stake work, because they are not participating in the validation work of the underlying blockchain. Yeah, so the DeFi staking is basically you send all your tokens into a smart contract, and that smart contract deploys those tokens either into trading or into lending. Yeah, so in this case, that's how you earn interest. Yeah. However, in this case, your tokens will be out somewhere else. It's not in your wallet anymore. And also, this is more of a financial product instead of participating in the proof of stake blockchain for validation work. Yeah, so there's a big difference. And for us, we focus on proof of stake validation to generate the yield instead of DeFi staking. And I see that Sarah has asked a question. Okay, so where exactly does the yield come from for proof of stake? So we're going to touch that very shortly. Yeah. Okay, so you guys probably have heard about proof of work quite a lot in the past. So why do we need proof of stake? Yeah. So this is because proof of stake has a much faster. It's a technology that enables much faster transactions for a blockchain, right? So for Bitcoin and Ethereum, we're talking about transactions like 10 or 20 transactions per second. But think about this is a global network, and if we only bear with like 20 transactions per second, this feels like the internet back in the 90s. It's too slow. We can't play games, we can't do e-commerce on that kind of internet. That's why proof of stake comes in, because it's more efficient for scalability reasons. And number two, with that scalability capability, smart contracts on proof of stake blockchains can do so much more. That's why we see many more applications on Solana, on Polkadot, because with smart contracts, we are making blockchain much more versatile to do multiple type of things. And this is really the key to make blockchain merge into Web 3.0. And lastly, some of you probably are aware that in order to operate blockchains previously on proof of stake, you need to buy very expensive machines that are just dedicated to mining, and they consume tons of energy. Yeah, so this is definitely not great for our environment. That's why proof of stake, because it's more efficient, it does not require specific machines. So like normal machines or even like cloud servers are capable of doing this work. that's why the electricity consumption is also much less. So, the key takeaway here is that we would like to encourage everyone to look at proof of stake blockchains, because this is gonna be the key for blockchain to do much more work, and also to to become part of internet. So this is also how internet business is gonna change with proof of stake blockchains. Okay, so now we answer Sarah's question right away. So where exactly does that yield come from? So we'll start with a short clip again.
Hey, how are these rewards generated? Well, every time a block is validated, new tokens of that currency are minted and distributed as staking rewards. For example, proof of stake assets like Solana, Tezos, etc. let you earn rewards on your staked assets. Primarily, there are two types of rewards that get distributed. Number one, staking rewards. Here, you stake your crypto assets with a proof of stake node to validate a block of transactions. If the node you have delegated to successfully signs or attests to blocks, you receive a staking reward, thereby increasing your net crypto assets. And similarly, in case your node is unresponsive or misaligned, for example, double signing, a portion of your node's assets and hence your assets can get slashed or destroyed. The staking rewards are thus an incentive for these nodes to perform the process of ordering the transaction, verifying them, collecting them in a block, and subsequently validating the block. Number 2. Transaction fee. In addition to staking rewards, each transaction carries with itself a small fee, making it easier for the node to prioritize the selection of transactions to be entered into the block. And the accumulated fees from the underlying transactions also goes to the node. We all know that transactions are what make up a cryptocurrency. For different protocols, these transactions could mean different things. They vary from token transfers to smart contract executions, and despite the dissimilarity in transaction types, the common thread is that these transactions always get ordered and clubbed into a new block so that all nodes in a network can.
Okay, so to summarize, so let's take the example again, right? So blockchain itself is a payment system. So there are two venues for us to gain yield. Number one is that when a blockchain is launched, they have reserved a significant amount of tokens to reward people like us to do validation. Why is that so? It's because, for them, they are also aware that they are not running the hardwares and the softwares. That's why they need to incentivize people like us to do the work. That's why, for us to participate in the validation, the reserve of block rewards will be gradually sending to us block by block by every time we do the work. And secondly, because it's a payment system, so when people transfer and do transactions, there is a small amount of transaction fees that is charged. Yeah, and those transaction fees are shared among validators like us to our stakers, because just to reward us doing the work. Okay, so the implication here is that, number one, the yield from proof of stake staking is stable and sustainable, because each of the team has already have this reserve that they planned out. Okay, so we're gonna give out all those reserves, let's say in 20 years or maybe in 30 years, or could be even longer, right? So this is kind of like, okay, every day we do the work, then we get part of the reserve, like slowly. That's why, when we talk about the yield, because of the reserve, this is gonna be quite stable for a really long time. And this reserve is only because, they want to bootstrap the network when at the beginning transactions are not so much. But as the network grows, more people start to use the network. So actually, transactions will happen much more. We're talking about millions of transactions or even billions of transactions per day. So all those the transaction fees will also increase, right? So maybe at the very beginning, the first 2 years, it's mostly block rewards. But as more users use it, transaction fee will become a much big chunk of yield. Yeah. So this also means that from a business point of perspective, it's a very sensible, it's a sustainable business, and we could even expect yield to be higher with a exponential network effect of usage. Okay. All right. Yeah. So so everyone has understand. Okay. So proof of stake is for validating the network itself, and we get rewarded for doing the work from the reserve and also from transaction fees. But how do we, how exactly can stakers like you guys to work with us? So what do we need to do, and what do you need to do, right? So to give you a tangible example, so in order to do validation, as a company, for example, RockX or any other staking providers, we set up a servers that with high hardware specs that is capable of running the software that which is the blockchain itself, right? So we set up the hardware, we run the software, and then we make sure that the software is working as intended 24/7. So this means we need to build a lot of tools to check, okay, our hardwares are okay, our software is okay, we're producing blocks all the time. If things happens, there will be alert that sends to us, and we will do troubleshooting. And also, because blockchain is still a new technology, so sometimes their teams need to issue a bug fix, or sometimes there are like emergencies we need to do. So we attend to those things. Yeah. And number two here is that because for individual stakers, sometimes they're not holding that many tokens. So because each blockchain does have a threshold of a minimum amount in order to be a validator, that's why this makes hard for individual people to run their own validators. But however, with us, because we already accumulated a sizable delegation together, so people can easily just stake those tokens with us, whether it's just one token or many tokens. Yeah. So we lower the entry barrier for individual stakers, and they do not need to do anything about the hardware or the software. And lastly, we also want the blockchains to be successful. Hence, we participate actively in the blockchain ecosystem, whether it's to build tools for them. For example, we build wallets for OSs, or it's about, we engage in governance discussions so that, we're making sure that our voice and our community's voice are heard by the blockchain itself. Yep. Okay. So pool time again. So let's do the second poll here. Yep. So the question here is, would you class yourself as a retail or institutional investor? Okay, cool. Yeah, thank you very much. Yeah, it's kind of within our expectation that we'll have more retail investors in this webinar. This is also why we're trying to make things, simpler and also more straightforward to explain. Okay, so let's move on. Yeah, so we run the hardware, we run the software, we do the troubleshooting, making sure everything works as planned. So what do you need to do as a customer, right? Basically, it's very simple. It's as simple as you do a transaction on blockchain. Yeah, but the trick here, the caveat here is that you are not sending anything out of your wallet. Yeah, so here we have a video that demonstrates how a customer successfully stake Kusama on RockX validator in 3 simple steps. And after that, every day the yield just goes to him directly. Okay, let's play the video. Okay, so this guy has a bit of Kusama. So he wants to do staking. That's why he can choose, okay, so I want to stake 0.1 Kusama. I confirm, okay, I would like to do staking. Password input. Okay, it's done. So just waiting for the transaction to be confirmed. Yep. Transaction successful. So now he can just look at, okay, so he has staked on RockX Kusama validator for 0.1. Yeah, so what he needs to do afterwards is every day he can just check his wallet to see how much rewards he gets per day. And if he wants to unstake, it's a very similar transaction just to unstake everything. Yep. So the interesting here is that, number one, we would like to say again, your tokens are not transferred to us. Yeah, it's only just for you to send a signal to the blockchain saying that, okay, you would like RockX to do validation on the blockchain on your behalf. And during the period you're staked, you cannot transfer your tokens out of your wallet. And lastly, there is a slashing risk, meaning that if the validator does something wrong, but mostly it's called double signing. So validator like us, we will be first penalized, but you guys will also have a penalty. But luckily to say, this is something that never happened to us because we're economically incentivized not to do double signing because we will lose money as well. Mm-hmm. Okay, so I see that people are asking whether I can take some of the questions. Sure. Okay, so I'm going to take a question from Asman Hamid. Yeah, oh, I see Asman has asked quite a few questions, very interesting ones. First of all, can you stake from your hardware wallet, such as Ledger? The answer is yes. So here we support all the wallets, whether it's a web wallet or app wallet or even hardware wallet. Yeah, so no problem at all. Yeah, because again, we're not moving anything out of your wallet, which I will talk a bit more how exactly that works later. Okay, are the rewards auto compounded from ceiling? Yes. Yeah. So as long as you don't unstake, the rewards that you received previously will be auto staked. So which means your yield are getting additional yield afterwards. Yeah. From Asman, are we doing any regulated activities here by MAS? So this is something that we're working very closely with our lawyer. But currently, these are what we have realized. Yeah. So first of all, we are not facilitating any token-to-token swap or token-to-fiat swap. So which means we're not doing any trading activities for our customers. Yeah, which is mostly exchanges. We are not doing that. Number two, we are not getting our customers' tokens into our custody because we're doing a non-custodial business. So what we're essentially doing here is that we operate validators on our own and we make it open so that anyone can just delegate their rights to us so that they are eligible to earn the staking rewards from the blockchain itself, not from us. Yeah, so this is something, again, I will talk a bit more later. Okay, guarantee. Okay, one question from Maxim Berger. So how long the staking yields are guaranteed? Okay, to answer you, these are quite stable because each of the blockchain team are looking at a quite long time horizon. So usually we're looking at unchanged yield at least for like 2 years. They might adjust it only if transaction fees are getting much higher or more people are staking, etc. Okay, so let's move on. Hope that's okay. All right. Oh, okay, so I'm gonna pause here a bit. We have a short survey that we would like to get you guys onto. So help us to introduce to understand how to serve you guys better and how can we do better. So please scan the QR code and do the survey. We do have some gift cards for you guys. And also you can keep in touch with us on our website, Twitter, and Discord. Interestingly, our Discord, we're doing a few campaigns right now, so do not miss that. This also includes a ticket to Miami Bitcoin 2022. Yeah, so yeah, please help us to fill in the survey. Okay, thank you very much for filling the survey. We'll try to keep it 1 hour for this webinar, so I will proceed right now. Yeah, so this slide is to answer quite a number of questions from the Q&A part. How exactly we're making sure this is secure and how we are generating the yield for you guys. So as you can see, RockX has a direct interaction with the blockchain, proof of stake blockchain directly, because we're running the hardware and software. That's why all the transactions will be processed and validated by us. And in order for us to be entitled to validate those transactions, we do need people to delegate their tokens to us. That's why you see the dotted line here from the clients. This is only just for them to send a signal to the blockchain saying that, hey, I have this many tokens. I'm willing to lock in my own wallet. And I would like RockX to validate the blocks on behalf of myself. Yeah, so in this case, it's the client that sends a signal directly to the blockchain, not to RockX. Yeah, actually, then the blockchain itself tells RockX, okay, you have this many delegations. So the implication here is that, number one, you have never sent any tokens to us or anyone else. And number two, you have not disclosed your private key to anyone. And number three, your tokens are stored in any wallets as your wish. Hot wallet, hardware wallet, anywhere you like. Yeah. Then because we have been running the validations for the blockchain, so the blockchain itself sends the block rewards and the transaction fees directly to the client. So again, we are, as RockX or any, we are not withholding any of your rewards. That goes directly to you between a settlement between you and the blockchain itself. So only thing for us is that there is a pre-agreed commission that goes to us from the blockchain itself. Yeah, so we are not touching your staking rewards. We're not redistributing the staking rewards in this case. Okay, so this is called a non-custodial staking. We prefer to do it this way because this way means that if anything happened to us, your assets are safe. Yeah, and also this also enables us to work with any company or any customers, as long as they just send a signal to the blockchain instead of they have to do anything with us directly. And we just need to make sure that we are constantly generating the yield for you, and that's it. Okay, so we have talked so much about proof of stake, but you are probably aware that there are so many different blockchains out there, so many proof of stake assets you can do staking. So how do you choose them, right? So again, we see that proof of stake staking is like getting into a corporate bond, an internet corporate bond, right? So we do need to make the right choice that suits your needs. There's no single answer, to all. It really depends on what you think is more suitable for you. Yeah. So we have listed out a few considerations here for you. So the first one here is that each blockchain has different value proposition. So which one are you more convinced from a ideology perspective and also from a technology and business perspective? Yeah, so there are blockchains trying to be more scalable, to be faster. So for example, Ethereum 2.0, Solana, Terra, yeah. Also, some other blockchains are more focusing on privacy to make sure that not all the information on blockchain are public. You can safeguard your trade securities, etc. So, for example, in this case, it's OSs. And some other blockchains, they're trying to connect different blockchains to let them work with each other and talk with each other. So that's called interoperability. So Polkadot is the one that has been working on this quite a fair bit. Cosmos is another one. So the question here for you is really about, okay, do I think that currently blockchain should focus on scalability or privacy or interoperability, or maybe all of them? Yeah. And secondly, because we're looking at this as a bond market, it's also important we look at how big that bond market is in terms of market size and also liquidity, because these two factors kind of also implies how the financial market are responding to the different types of tokens. And number three, as a staker, it's also important to understand what is the current yield. And for example, some of them are around like 5%, some of them are above 10%, but also because each of them has a different unstaking period. Some says, okay, if I want to unstake, I need 3 days. Some say, okay, if I want to unstake, I need 14 days or 28 days. Yeah, so that's the period that you miss the period of your loss of opportunity cost, your opportunity cost. Again, this is not done by us. We're not locking your assets. This is done by each of the individual blockchain itself. So we do need to understand that, right? What you're getting in terms of yield and what is the opportunity cost of the time period. And other considerations here is about, do you prefer a more emerging technology, or you prefer something more of an establishment? Ethereum is probably more of an establishment, while the other ones are more like experimental in nature, yeah? And other things are more like culture of community, kind of like whether you agree with their corporate value, and also whether you agree with their direction of adoption, similar to their business strategy or go-to-market strategy. So we are not able to give you a concrete answer, but we would like to, open up these, to point out these considerations for you. You do need to do your own research. This is also the fun part, to understand what exactly blockchain stands for and make your decision on which are the ones you believe in. And hence, probably you want to possess some of the tokens and just generate additional yield while you're holding those tokens and wait for the technology to be more successful. Yeah, we have seen different types of customers in the space. The traders, they don't sleep at night. They check their phone about price all the time, and that's one lifestyle. But the customers we usually serve with, they're the stakers. They put their tokens there for a couple of months or even years. So in this case, they do not look at the price all the time. They're more looking at how to build up their exposure to the new technology, and also how to look at a financial plan for a couple of years. Okay, yeah, just quickly cover how we see the staking industry would where it's gonna head into. Yeah, so we think there are a couple of angles to make staking even better for our customers. So number one is to make sure that the validators are more secure, so they are always up running. There are some distributed technology we can use, and also automations. Yeah, so we've been working on that. Number two here is that staking as a bond, it's also interesting to make it liquid so that you can sell your tokens anytime without having this unstaking period or the opportunity cost. And number three here is about yield booster. Yeah, okay, staking has already given you a very stable yield. Can we do more structured products to make the yield even higher, or at least have a higher upside? And lastly, whether there are any tools or ways for our customers to be more engaged with the governance of the within the community. So these are the kind of things we've been looking at. We have also worked closely with other people on these kind of things. Yeah, so 2022 is going to be very exciting for the industry and also for ourselves. We think this is only just the start of proof of stake blockchains adoption, and also for staking as an industry. Yeah, particularly in Asia, not people are aware of staking yet. They are more looking at trading profit previously, but I think more and more people will look at this kind of fixed income opportunities for their own possession. Yeah. So last year, what we have built is very secure technology at the core. So we have built on-chain data access. We have made sure our staking is non-custodial for people, to generate yield, and also we have made multi-party computation for key management. So this is to avoid private keys to be leaked out. So this year, what we believe is that, first of all, we want to make all those core technology very accessible and friendly to every single user. Yeah, that's why we are building all those user interface. For example, a subscription portal for people to purchase any of the data access, as easy as like, okay, I want these blockchains, I want this type of services, I just subscribe it. And also, any people can get onto our website and stake very easily and see their rewards day by day. So these two products will be out in 1 or 2 months. This is just additional layer, for people to manage all their services much easier just on our website. And the more interesting part we're working on are the actual products. So we have been building liquid staking products. So for example, we are already developing liquid staking for Avalanche together with Lido, which is the largest liquid staking provider for Ethereum, and also Hyperelliptic. Yeah, so this will make staking more liquid. And on top of that, we are designing structured products to have additional yield on top of the staking yield. So we call them yield boosters. So this will make sure. So this is an interesting attempt that we will make staking as a Lego on working very closely with DeFi products. Yeah. And lastly, together with our capability of MPC and our data access, we are also building easy ways for people to manage their keys across multiple chains. Because otherwise you have to use multiple wallets. You have to remember a lot of private keys for every single blockchain. this is not sustainable. Yeah. Yep. So these are all the things we would like to share today. I hope this is informative and also interesting for you, so that you're aware proof of stake is something that is upcoming as a technology, and also will blend into internet. But also from a financial perspective, this is something that gives you a decent yield that is sustainable, stable, and also does not breach the security of your own assets. Okay, so that's the end of my presentation. Thank you very much again, to spend 1 full hour with us on Thursday. I'm sure, each of us are having a lot of things going on. Yeah, so I hope everyone are staying safe and spending enough time with loved ones during COVID. Thank you again. Please take the survey with us and also follow us on our social media. Stay tuned. We have a lot of more interesting stuff to share in the coming months. Okay. So I guess I couldn't answer all the questions. So my suggestion here is that if you guys could join our Discord and list out the questions over there, we'll answer those questions on Discord. Okay. Yep. Thank you very much again. Enjoy the rest of your day.